Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And in my presentation today, I'm going to show you two stocks that happen to have similar models. The companies I'm referring to is AFTERPAY and the other one is OPENPAY. So I'm trying to, in this presentation, to show you the comparison between those two companies, and if you're going to trade any of them, which one may suit your interest and your strategy. Okay, so we start here by telling you that AFTERPAY and OPENPAY, two separate companies trading on the stock market here in Australia, and AFTERPAY and OPENPAY, both offer a payment companies. Some people may be aware of the lay-by system in Australia. However, it's slightly different because with lay-by, you keep putting the money in until you pay the whole lot and then you receive the goods and services. Well, with both of these companies, AFTERPAY and OPENPAY, what happens, you actually pay in installments. However, you receive the goods immediately. And there are a lot of big chains, department store, and many other facilities and services that happen to be available on both systems. So what happens, you actually enter the trade, you present your credit card or your membership with AFTERPAY, which will be on your mobile, your smartphone, and you're in. You don't pay any interest except when you don't pay the installment that is due. And of course, the schedule is actually set up at the start of the business. So some people pay over 4 installments with maybe fortnightly installments, and some can pay over much longer period, depends on the system that you use. Each of those they do offer separate different, there is a slight difference between them. The model is the same, however the facilities and the process can vary, and I'm going to go through that in a minute. Okay, so that's the two companies I'm referring to. Okay, now the difference between the two, they're only in about 4 different areas. The different fees, different payment schedules, and the way you sign in, and the various credit checks they do on you when you enter the trade. Okay, different fees. Well, the former, that's AFTERPAY, has no sign-up fees and also charges no interest if you pay on time. OPENPAY, on the other hand, has more flexible system depending whether you choose a much longer period to pay for the full amount owing. And there could be also here some establishment fee when you start the business, when you start to getting the contract with either of those companies. There is some, AFTERPAY is a lot easier to sign in. There is no big deal about it. However, both of these companies offer you online or in-store facilities. Credit checks is usually done by OPENPAY. However, AFTERPAY takes more risk in you by not having a credit check on you, as long as you offer your credit card facilities, they've got a way of getting their money through the banks. All right, well, next slide will show you a little bit more about what Morningstar fair value is. As a matter of interest, AFTERPAY at the moment has traded of recent time between $65 and $75. That is actually where it is at the moment. I'll show you the chart. I think it's about $72, somewhere in between. Morningstar believe that the fair value of this company is only $35.20. But I must hasten to say that AFTERPAY had injection of cash from the institutions and shareholders. They actually set up new shares, and they were all bought at $66. So the institutions obviously are a lot smarter, and they wouldn't have actually gone into this particular shareholding lifting, and by the way, they raised $650 million at $66 each. So there must be some expectation that this company should really do well. So Morningstar valuation of $35.20 may be underrated or underestimated. On the other hand, OpenPay at the moment is trading between $3.50 and $5. And Morningstar valuation, as you can see here, is $4.33. So you have to say that there is a lot of expectation with AFTERPAY. AFTERPAY before the coronavirus was trading around $35, $38. And then once we were actually hit with the coronavirus decline in the market, AFTERPAY price dropped to $16. We entered the trade around $16. However, unfortunately, we got out when the price went up to about $35. And we waited for it to come back, but then it actually zoomed up and ended up at the moment around $72, having reached an all-time high of $75. Well, what we present to you, OpenPay here, we trust that provided the model is the same and the growth of the company can materialize some greater extent in what they do at the moment, we hope that OpenPay will escalate the price and move much higher to where it is at the moment. It is very important to actually say to you right now that both of those companies don't generate positive net profit. They both happen to have high expenses and are both losing money. Let's go into that in a minute. Looking at the technical system that we've got here, we actually look at the chart and we look at the monthly and the weekly and the daily, depends whether you are an investor, where we use the monthly and the weekly charts, and if you are a trader, we use the weekly and the daily, as you can see them here. The one on the left here, AFTERPAY, is the weekly chart. You can see it went up all the way to $40 and then dropped to sometime even lower than $16. I mentioned that we got in at $16. It actually dropped to $10. And then from that point onwards, the market zoomed up week after week after week after week, and we are somewhere around the 75, at the moment 72. This chart was taken only a few minutes ago before I come in, and you can see that whether it has reached the peak for the time being, and it could drop or it can continue up. Some institutions believe that AFTERPAY should really go up to $100. Now, of course, you have to be a bit skeptical on that. Now, the daily, as you can see here, this is every chart, every candle, every bar, every candle represents a day performance. Green means up, started at the low end of the box and finished at the up end of the box. If it's red, it opened high and closed low. However, that little tick at the bottom of that box representing that even though it closed somewhere in the middle, but during the day it actually fell all the way down to the bottom and then managed to recover halfway through the day range. And we look at indicators. For instance, here we've got the stochastic. It's actually in the overbought area, but we still believe that's positive. If it starts to drop below that line, which represents 80% of the movement, and then we say it's gone bearish. At the moment, it's sitting above that line, it's bullish. The parabolic stop and reverse, that's all those dots, red dots, they're all below the candles, they're all bullish. So that's another indicator that it is bullish. And then you've got this line here, the orange line dotted, it's above the black dotted line, which is actually the 21. You've got the 9 and the 21. When the 9 is above the 21, that's positive. And also on the daily, the same thing appears here. That line, which is actually the dotted line orange, is the 9-day moving average. It's above the 21-day moving average. well, that's bullish. Bullish means we expect it to go higher. The stochastic happened to be bullish as well. The parabolic stop and reverse, those dots happen to be above the candles. They are bearish. So that's interesting. So you've got some conflicting indicators here. And when we look at OpenPay, you've got the 9-week moving average above the 21-week moving average. That's bullish. The parabolic stop and reverse, all those dots are below the candles. That's bullish. Stochastic is bullish. So that's the weekly bullish. And then when it comes to the daily, the parabolic stop and reverse were above the candle, but then they dropped and became below. That's bullish. Stochastic, on the other hand, is bearish. The blue line is below the red line, and below that line, the 80%. So that's bearish. So I want to highlight the fact that even though we had a major climb in both of those companies, they may have actually hit a little bit of a ceiling, and it has to break through that ceiling before we can actually expect it to go much higher. So it says that particular, it doesn't matter whether you trade AFTERPAY or OPENPAY, they both are for the aggressive trader. So if you are happy to take some risk and hopefully don't put all your eggs in one basket and know when to get out, then obviously you need to be very cautious. And I have got separate papers covered in my website for each of those companies with a lot more details than what I'm making at the moment. So I suggest you go to the website and look at each of those presentations under our picks. You go to the website and click on our picks and look for both of these companies. Okay, next we go and say the indicators. Well, we've gone through some indicators. Well, now some further indicators. The MACD is bearish for AFTERPAY, neutral for DMI, bearish for the RSI. RSI stands for relative strength indicator. DMI stands for directional movement indicator, and MACD, it's all about the convergence and divergence. So it's actually moving average, convergence, divergence. If you look at OpenPay, they're all bullish, the other indicators. Okay, so you have to take, when we study each of those companies, we actually look at minimum 5 out of 8 indicators on the weekly and the daily for the trader, or 5 out of 8 indicators in the monthly and the weekly for the investor. And by the way, if you want to learn about how we actually study the market and how we look for the charts, indicators, and how we study the indicators, all you have to do is talk to us. We run courses for everyone who wants to learn, from a very beginner to even an expert. Okay, the next one, we look at fundamental analysis. Look at AFTERPAY. As I mentioned, they raised $650 million with share lift, and they still got plenty of cash in the bank. Cash 352, assets in total. By the way, they've got receivable. People are still owing the company money. So of course there is risk. So there is an element of risk here. So even that money here is receivable, you need to be aware that there is risk behind it, or there is a small risk provided there is some kind of assurance from the bank. Now in terms of liabilities, as you can see here, if you look at liability versus assets, the company is rich in the balance sheet. On the other hand, OpenPay started much later than AFTERPAY. Their operation is a copy of AFTERPAY. AFTERPAY has been around for much longer, and you can see that back in 2017, their asset was much lower, but still they had money in the bank. Now in here we can see that OpenPay started very slowly, Their stockholder equity was negative. If you look at total assets versus liabilities, and then there was improvement in 2018, and then the coronavirus, of course, hit them, and now we've got $25 million of receivable, and we hope that they actually get paid on time. They've got $8.7 million in the bank, and as I mentioned, they've got $7.7 million in deficit in shareholders' equities. In terms of revenue, you can see here that this company here is doing a lot more business, $264 million of trades, but remember, very high receivable risk. In terms of OpenPay, $11 million of revenue so far, and when you look at their expenses, 14 million out of 11 million, so obviously they end up with a negative. So the operating loss, the expenses were 22 million, so they're paying their shareholders very little versus they're paying their management high salaries. The same thing with AFTERPAY. Look, total expenses nearly 300 million. A lot of money. Where is that money going? Well, you need to study all their balance sheet in details. But the bottom line is, AFTERPAY, in terms of net income, is negative. They've got no net income. They are $43 million in debt, while OpenPay nearly 15 million in debt or in negative performance. Looking at the chart, as I expect you to know that the market has actually gone quite a bit for AFTERPAY. This is the weekly. You got 50-week performance. If you started here 50 weeks ago, you've got more than double your money. And AFTERPAY, as you can see, the line is going up and up. That's the last 30 days. OpenPay, on the other hand, down before it went up. So there was an issue here with the coronavirus. Well, you can see here that after the coronavirus, they were still going down, while AFTERPAY, after the coronavirus, they started to move up. There was not enough sufficient data to go as far back as 50 weeks. Okay, now in terms of expert criteria, this is the AFTERPAY. The revenue growth, there is a pass for both companies. Sales growth, they expect much greater expectation that the sale will increase. They actually recently bought into the UK market, and that may offer Australian and the British consumers much bigger, wider environment to buy their goods and services. The growth for of OpenPay is not known at this stage. You can see that the earning is failed for both. They're not making any money. Debt to equity is fine. I want to really go back and see how much debt versus equity, and we look at both companies. Debt to equity, they passed. They don't pay any dividends yet, although the sector, the industry as a whole, they do pay a little bit. Market capitalization, they're a very big company, nearly $20 billion. Market capitalization here is only 190 million, so you can see the big difference in the size of the company, and also the spectrum of shares traded times the price of the current price for the shares. Okay, and in terms of as I mentioned earlier, that there was a purchase plan offer. They raised $650 million, and there were a lot of institutions that were interested in this company. And if you want more information, you can actually go to that particular site, click on it, and then you'll get more details. And as you can see here, there was a media release in the US regarding AFTERPAY partnership with Apple Pay and partnership with Google Pay for in-store purchases in the United States. So this is actually offering a very big, wider market for AFTERPAY. Now I'm sure that OpenPay will try to do the same thing. Depends on how much money they've got in the bank and how much they want to expand, how fast they want to expand. Okay, this is more key metrics for OpenPay. You can see there is an improvement in the performance. That is actually active plans, the number of people who are trading with them. 460,000 people are operating into the system. Active plans and active customers who are really getting involved, even though they signed in, the people are actually buying it, at least half. And there are 1,894 merchants that have given OpenPay the facilities for consumers to actually buy and sell. Okay, repeat. So it's very important to see a client that is happy and repeats the business. And in terms of the million of transactions in dollars, there is nearly 85 million from 54 million the year before. Revenue 8.3, quite an increase, 73%. However, it's still far behind AFTERPAY. Okay, finally the disclosure. Everything I said to you today is only for general advice only. And please, before you take any action, consult with your advisor or you talk to us. Remember, there is risk in the market, and this particular trade may only be for the aggressive trader, and you need to understand your own risk appetite before you enter this trade. Alright, if you have any questions, all you have to do is ask. And if you want to ask me any questions, you have to write to me at George@FS Securities. FS stand for full service. George@fssecurities.com.au. If you're ringing from overseas, 61 is the country code, and then you don't need the 0. 61-411-259526. And if you're ringing from anywhere in Australia or you want to text me on 0411259526. Okay, happy trading, and I hope you make some money.